This is the FCTO Daily Forex News Report for the 23rd of April 2013. Asian equities are broadly lower today after disappointing manufacturing data from China, which has also put some pressure on the Aussie. The preliminary HSBC Manufacturing Purchasing Managers Index dropped to 50.5 in April, down from a final reading of 51.6 in March. That also missed expectation of 51.4. The data suggested that manufacturing activities in China continue to slow and are barely expanding. Also, this added to concern of the overall pace of recovery in China following the weaker than expected Q1 GDP release earlier this month. Australian dollar US dollar extended the fall from 1.0581 and has reached as high as 1.0220. Euro Australian dollar took out last week's high of 1.2738 to resume the recent rebound from 1.2218. US dollar Japanese yen has still not managed to break above the 100 psychological level, and the yen rebound overnight serves as a reminder that global risk markets and growth expectations remain an important driver of yen crosses, even at a time of extraordinary Bank of Japan balance sheet expansion. Increased evidence of another Q2 soft patch in global growth is driving not just the yen, but has also pushed the commodity currencies lower, while so far having a fairly modest impact on Euro US dollar. Things are also different this time, as the Q2 growth slowdowns in recent years have, if not been driven, at least been amplified by heightened euro risks. Also, expectations are that any pause in growth will push a reduction in monthly Fed asset purchases further into the future. This is not to say, however, that Euro US dollar could not fall on greater global growth concerns. Most likely it would, just that downside risks appear less pronounced compared with 2012, 2011 and 2010. Looking at today, we will get PMIs from France, Germany and the Euro area, and they will be closely watched by both the market and the European Central Bank. If our forecast of a broadly unchanged reading on the Euro area PMI for both manufacturing and service is right, this will further strengthen our conviction that the ECB will deliver a 25 base point rate cut at the meeting next week. Later in the day, we will get the US market PMI for April. Consensus is looking for a moderate decline to 53.5 from 54.6, but this still leaves the PMI more than 2 points above the March ISM. Data from the US has been weakening recently, and the regional PMIs received so far have been downbeat. Hence, we see a risk that market PMI could surprise on the downside. For all the news affecting the Forex market throughout the day, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.